and welcome to this discussion on group medical insurance and how companies can save millions by adopting a strategy that combines the top savings tools out there with the comfort of a national network that all your employees will know, recognize, and be comfortable with. My name is Jared Beck, Managing Director at Risk Management Advisors, and I'm excited to share my insights with you today. So, as a business owner or an executive, you know firsthand how the rising cost of healthcare puts a strain on your bottom line. I want to provide employees with comprehensive, high-quality benefits, but the increasing premiums year after year can feel insurmountable, unsustainable. When I look at a lot of P&Ls for companies, I see that the medical benefits spend is often the second or third largest, oftentimes right after payroll itself. And so today we're going to explore the reasons behind these high costs and introduce this game-changing solution that can help you regain control over these expenses. So let's start first with, why is group medical so expensive? And there are several key factors at play. So first and foremost is the lack of transparency. The healthcare industry and health insurance companies are notorious for a lack of price transparency. It's nearly impossible to know the true cost of a procedure or treatment before receiving the bill, making it difficult for employees or companies to budget effectively. And that has led all these consumer-driven healthcare plans, HSAs, high deductible plans, to largely be somewhat inept at controlling cost. Putting the impetus back on the employee to figure out and try to control the cost of this tangled web, in this black box of healthcare spend, is just a recipe for failure. The system is rigged against them, and it's rigged against the employer itself, intentionally opaque. You don't find out about what a procedure costs till after it's happened, till after it hits your plan, and runs through your claims processing system. So, and then next, the lack of transparency wouldn't be a problem if the prices themselves weren't so inflated. And it's important to understand where this inflation comes from. Basically, if you look at most plans out there, 10% of the employees spend 80 to 90% of the claim dollars. So we have a very small population, or a very small percentage of the people out there utilizing a majority of the claim dollars. All right. And then of those claim dollars, 60% of that money is spent in the hospital setting, inpatient, outpatient, emergency room. And that's where it's critical to understand that's the biggest dollar expend. And it's also where the hospital providers often charge massively inflated prices for these services. And they do this for a couple of reasons. One, they've entered into negotiated contracts with the insurance companies. They know they've entered into discount arrangements with the various carriers out there. So, they'll almost tell you they have to mark up the bill or get the bill high enough to factor in for the discount that they're providing to the insurance company. If you want to fact check this, just next time you go in, say, or you receive a bill, say, I don't have insurance, and ask for the cash payer price. And the cash payer price, you'll know, hey, this is less than, what my, the bill is here for the insurance. And, a lot of times they'll tell you, well, we have to factor in for the discount that we're giving to the insurance company. So they immediately inflate it up because, they know it's going to run through a discount model. Now, even after the discount is applied, the price that your plan pays, is still massively inflated, significantly higher than the actual cost of providing that care. And we know this specifically because, if you look at Medicare, which is, the federal government insurance program for, those 65 and above, Medicare doesn't care what a hospital pays. Medicare just pays what it pays. So it's a fixed amount. It doesn't matter what the bill is. They pay, fixed amount based on, cost plus, a certain margin. And many of these bills, net of the discount, are still 400, 500, 600% above what the Medicare program pays. But incidentally, most facilities, hospitals, etc., accept Medicare happily, based on the volume. Meanwhile, happy to charge employers and companies and privately held businesses, 4 and 5 and 6 times that. So if we can control that hospital cost, if we can control that piece of it, we really do 80% of the work on having a really lean, sustainable, cost-effective plan. And we'll get into how to do that. And then, the last thing to understand is there's just misaligned incentives. In the current system, insurance companies have very little motivation to control cost. In fact, higher healthcare costs lead to increased profits for them. If the claims slowly tick up year after year, it gives them the ability to charge higher and higher premiums, and then their allowed profit percentage on that premium becomes larger as a result. So the employers and the corporations out there that are purchasing these benefits, they're not the true customer. The shareholders for these insurance companies are the customer. So those are the reasons for the high costs. Now let's get into what we can do about it. At some point, many brokers, many employers may have been introduced to the concept of reference-based pricing. And what reference-based pricing says is kind of what I was alluding to earlier, that, hospitals will bill a certain charge. There will be a network discount, but that net payable is still higher than what Medicare would have paid. So what you can do under that model is establish a plan that says we're going to pay a Medicare plus payment amount to the hospitals, 140% of Medicare, 150% of Medicare, with the expectation that the hospital will gladly, if they take Medicare all day long, they will gladly accept the 140, 150 payment. And that 140, 150 payment is substantially less, do the math, than a 400 or 500% of Medicare payment. And, many companies have leveraged this strategy to have massive savings. The problem that kicks up is that there's no network associated with this type of plan. This relies on the employee going in, presenting their card, and having the plan pay these benefits without the benefit of having that network familiarity that employees and the person at the front desk are used to seeing. This can lead to a lot of disruption. Saying, well, we don't understand what this insurance is. Who's your carrier? We don't take this. And then on the back end, while 99% of the claims go smoothly, there's always that 1% where they'll receive the payment, the 140, 150 payment, and say, well, okay, we didn't get the full amount of our bill. There's no network contract here, so they send it back to the employee and balance bill them for the entire thing. So that has led some people to be reluctant to adopt that strategy, understandably so. So enter in this next generation solution. What we have here on the platform that we've designed is we've got the ability to get those reference-based pricing results, that 140, 150 of Medicare in the hospital setting, but with the comfort of a national network issuing the card, issuing the network, running the payment. So as opposed to before, when there would be an ID card with no network on it, this now has national network recognition, and the payment is processed as an in-network payment through the carrier system, and there's no disruption to the employee. There's complete recognition of the card at the desk when they go to check in, and it's all processed as an in-network payment, which minimizes any billing issues. So this really brings the best of both worlds together. High-end, next-level savings strategies with the creature comforts, if you will, of a familiar network that people recognize and then people are comfortable with. So, with this approach, prices are based on clear data-backed formulas, bringing the transparency to the table, bringing the cost savings to the table. Healthcare providers are provided fair compensation for their services. And again, this is primarily focused on the hospital setting. So this is, nothing, with your primary care or, your family doctors. This is looking at the sort of overcharging phenomenon that's happening in hospitals. So, and, we've used this strategy, historically the RVP strategy, more recently this network strategy, just, to save companies millions on their healthcare spend. So, the ability to select the right network, select the right platform to run your plan on can really make all the difference in the world, adding money to your bottom line, also giving you the ability to take money, reinvest in your program, get rid of copays and make the benefits more rich for employees, which increases loyalty, makes them happier, et cetera. So, in today's, it's a tough business environment out there. It's more important than ever to find ways to control cost without sacrificing the well-being of your employees. And our approach is an effective solution that really solves the problem of these rising healthcare costs. So, again, wrapping up here, adopting this strategy, your company can achieve significant cost savings, greater transparency and control over the healthcare spend, potentially improved employee education and engagement, sustainable long-term benefits management, and a seamless experience for employees with a familiar structure. So, if you're interested in learning more, for you or your clients, and take control of your company's healthcare costs and explore the benefits of this approach, I invite you to reach out to learn more. Together, we can design and develop a benefit strategy to give you meaningful results for your business and your employees. Thank you for joining me today, and I look forward to the opportunity to work with you.